Welcome everyone to Vested Interest. This is Shane back again for their stock pick of the day. It is July 21st. We are wrapping up another month, one more week to go in this one, and on to August we go. Both my daughters are actually born in August, so I've got some birthdays coming up here. But today we are going to take a look at Vale. It is a mining company. I know that the materials and out of the material sector, I know the material sector is not one that is covered very often. And Vale will be a little bit different. Usually I look at stocks that are pulled back for the day, but we are going to look at this on a month basis. It is up a little bit on the day, but Vale is looking very attractive right now. I have actually picked up quite a few shares of Vale this week. Picked up some Monday and picked up some more again today. They are down below my cost basis, so I have added about 20 shares or so to my position. So I wanted to cover it this week, and this being the last video of the week, I thought today would be a good day to do it. So let's jump in and take a look at it. So again, we are taking a look at Vale. It is a mining company out of the material sector, originally established on June 1st, 1942. Used to be a state-owned, became a private company, one of the largest miners in the world. A couple things you should know. They are in 30 countries. In addition to mining, they work with logistics, railways, ports, terminals, and state-of-the-art infrastructure, energy, and steel making. They have recently signed a pretty big agreement with Tesla to provide all of their materials for their batteries, for their electric vehicles. And again, Vale, if you want to know more about them, www.vale.com. Go check them out there. And as I stated earlier, they were up a little bit today, 0.64%. Close of business, actually that should say 721. Apologize for that. But July 21st, $12.51, ticker VALE, and they are out of the material sector. As you can see, over the last month, they have had a nice steady decline. Look like they might be bottoming out a little bit, but in the after hours, it looked like they are pulling back a little bit more. They have a 52-week range of $11.16 for the low, high of $23.15. That is part of the reason I wanted to touch on them. They are definitely getting close to that 52-week low. This is where I started buying them back in October of last year, around $11 per share. I bought them all the way up until they hit about $16, $17 per share and backed off. My cost basis is right in the low $14 per share. And so that's again why I added a significant amount this week to bring down my cost basis. And again, I think they are getting relatively cheap. Anytime they get down here in these low $11, $12 ranges, I would look to add. That personally, my opinion, but you do your own research and invest based on your situation and circumstances and selected criteria. They have a market cap of $60.41 billion. They have a beta of 0.76. So a little less volatile than the overall market. You can see a little bit of that volatility here. They do have a PE ratio of 2.71, extremely low even for a mining company. They have a forward dividend of $2.23 yearly, and that amounts to a 17.95% yield. Now this does fluctuate from time to time. It is not always this payout, but it is typically a higher payout. A lot of these mining companies and companies in the material sector do have pretty high payouts, but they are cyclical in nature. That means at times the mining sector, specifically the mining sector when we're talking about this particular company here, will be doing well, and at other times it will be out of favor. So you definitely want to be buying when it's low and hold when it runs up to these 22, 23, 24, or look to book profits ranges, because they will run up significantly and then pull back again, as you can see here. And their last ex-dividend date was March 9th, so you've missed their last payout. A one-year target estimate, according to Yahoo Finance, not affiliated, just where I like to pull some information. They say a $19 target for stock price, which would speak to significant upside appreciation. Now, according to stockanalysis.com, again, not affiliated, just where I like to pull some information. And according to the 19 stock analysts that have taken a look at this, they call it a consensus buy. They have a low estimate of $18.53, which it currently sits much lower than that. And if it does hit their low, would be a 48.12% increase in stock price from where it currently sits. They have an average estimate of $20.97, which would be a 67.63% increase in stock price. And if it happened to hit their high, $26.79, that would be a 114.15% price appreciation, plus you would get that dividend if you held it long enough to get the next one. Vale doesn't pay quarterly. They are more of a annual or semi-annual payer, but they also do on occasion pay out a special dividend, which tends to be higher than their regular. So again, very nice dividend yield. It is very attractive at this price point, in my opinion. I added more this week. So for all full disclosure, I am long Vale, and I will continue to add if it's low. Anything under $13, in my opinion, is an add. That's where I look to add for this one specifically, at least right now. I'd have to go back if it runs up, or next year I'd relook at their books and their numbers. But I believe they are a big player in the mining sector, in the EV sector. A mining company going to be producing a lot of material for that particular sector, and I think there's going to be a lot of EVs sold over the next, let's call it 10 to 20 years. So this one I'm long on, might be one to look at if you don't already have it in your portfolio, or if you're looking to add something in the material sector. Vale SA, ticker VALE. With that said, guys, these are quick hitters. I always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel. That's most important. Drop a comment down below. That really helps out the channel. A small YouTube channel like myself get some more exposure and helps with the YouTube algorithm. So commenting, liking, and definitely subscribe to the channel. That always helps me out. I do personally read and respond to the comments. I'm always interested to read your questions, suggestions for future topics, opinions, or constructive criticism. Drop that all down below in the comment boxes. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time. Hope you had a great week and off to a great weekend. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can lose money. You should never invest any amount you're not comfortable losing. Always do your own research based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.